Hello everyone and welcome to my new pattern analysis video. This is on the triangle side. We're going to see the theoretical and the practical as usually and try to understand the most important thing. So triangles pattern. One common chart pattern is the triangle. There are three types of triangles. Symmetric triangle pattern. You've got your symmetric triangle patterns that are created when the line connecting the highs converges with the trend line connecting the lows to form a triangle. Those patterns are defined by a downward trending and an upward trending line converging together. Since both lines of the ascending triangle have essentially the same slope, the direction cannot be predicted with any likelihood. A breakout in one direction or the other is likely, but the direction of the triangle is not upward or downward because the slope of both lines more or less mirrors each other. This pattern suggests that the triangle in place before the pattern form will continue once price breaks out of the triangle. So let's discover the whole aspect in a very practical way. Symmetrical triangle represented right here. It's very important that you have your trending lines connecting at some point, and this is usually happening a lot. So at the top you have the resistance line of the trend, at the bottom you have the support line of the trend that are going to find themselves a mixture because of the slope they're having. So you have your convergence representation and the mixture is appearing right there. It is impossible for the markets to move without breaking out, in other words. So then what happens here? Well, you got the pressure set from the tops and you can see that on the highs. The first thing is we've got the shadows appearing on the highs and we've got them appearing at a lower level than the previous ones. Just like the quite straightforward reaction is another proof that the market is having a heavy resistance pressure at those levels. We've got a variety of pressures. You have that instant, aggressive, heavy pressure appearing at once that is generating an instant reaction of an energy. And then you have the other type of reaction that is basically appearing in delayed form and is definitely not instant at all. Now, we obviously enjoy trading the instant ones that are generating the revenue much quicker. But on the other side, you also have the support structure. And the trending line's got to know how to be completed. Trending line aspect is something quite complicated if you want to be accurate, if you want to do it right, and if you're actually looking forward to making money out of it. If you have the trending lines under control as major indicator, which can be actually developed in a whole lot of the comprehensive way, then actually, from my experiences 2014 and from my students' experience, you can make tons of money trading with those things alone. But once again, this can be driven to a very comprehensive part, which is something maybe different than the topic of the day. Symmetrical triangle pushing like that. And in this case scenario, basically it breaks below. The idea is that you definitely need to wait for the last part of the triangle. You definitely need to wait for that. Extremely patient. This is where the things actually matter in this particular side of the business, to be very patient. And then the markets are actually breaking below. So you have basically at the time of breakout, usually you have your pattern appearing, which can be traded with the continuation force of that. That's where a lot of the people enter into shorts right there. So this is how our symmetrical triangle is portrayed. That you have the ascending triangle pattern. An ascending triangle is formed by a flat line that comes with the highs staying at pretty much the same price and the sharp upward trend line that comes with the higher lows. In other words, the highs will stay constant while the lows will rise. This pattern suggests that buying pressure exceeds selling pressure, which will essentially result in a breakout. And this is the way it looks like on a practical side with the ascending triangle pattern. You got your flat top, and let me share with you what does it mean. So there is a resistance structure which reacts a few times, and the movement is quite instant when it gets touched. Even this one can be considered addressed towards the top. The idea is that your resistance line is flat and it is having a decent reaction in terms of spontaneous. But at the same time, you got a support here that is going upwards. What we used to have here that is moving below is a fake out, basically having in mind to see the way it reacts afterwards. So there is the ascending triangle, which in 95% of the cases breaks the resistance line at the top and then flies quite aggressively, grabbing the whole liquidity discovered on the structure of the market. The movement is done with stability on the upper side, and there's many signs out there during the structure where the entries can be placed for your trading. So this is obviously one of the easiest one when we perform our trading activity. Going forward, we have our descending triangles pattern, which are like upside and down ascending triangles. Instead of pointing upward, they point downwards. It's an upside down to what it used to be. This pattern is caused by the flatness of the slope of the bottom trending and the sharper downward slope of the top trending. This pattern suggests that sellers are overtaking the buyers and pushing prices downwards. This is a bearish continuation pattern and indicates a breakdown, downward breakdown. Once the pattern is broken, you can definitely continue basically understanding that this is a descending triangle in the way it's portrayed, and you've got your selling pressure that is constantly putting a lot of the pressure against the bulls, which are trying to hold the markets. There is a minor breakout, but then the market is basically dying. You see how we're having it in the opposite way than the way the ascending triangle has been looking like. This is basically the formula that we're actually talking about. And it's quite interesting that there are so many fake outs in the markets appearing after the patterns. You also got here a very strong buying pressure, as you can see on the bottom of the triangle on that flat trending line. That's quite interesting. A lot of you have been probably thinking that this is a great way of pumping it forward and then just establishing a new top, which is not playing out that easily. Even though the buying pressure can appear here, the selling pressure at high levels can be much bigger, triggering a significant sell-off. Meanwhile, your buyers will no longer step in over there, saving the prices in the markets. It will just plummet down. This is how the descending triangle pattern looks like in a practical way. Thank you for watching, guys. Make sure to subscribe to this specific video and channel as well. Like it. For those of you that think education is important and skills are important for your journey, watch this video till the end. We have a one-to-one coaching directly with me where I'll take you by hand and teach you how to trade. As well, there is my trading journey, report trader and representative as well. We do trading for a commission. There is no upfront fees, and if you want to do what do I trade for myself and be part of it, just watch this video till the end for more information. For those of you that value education and think that the results are generated by hard work, preparation, and a continuous process of learning, make sure to check out watching this video, as this is my one-to-one coaching, which I do out of passion for the ones that are interested in this space of learning how to trade professionally. We do have a one-to-one coaching program where I'll take you from A to Z into the process. It's basically a program that runs between 4 to 6 weeks directly with me. Usually we're doing on Zoom conversations. So basically we have the share screen turned on and I'm teaching you how to trade from the research process until the last stages of the market. So we're actually talking about a comprehensive process. We need an intensive coaching, which is going to have homework for you to do, where we're going to verify the knowledge together, where we're going to perform trading. It's actually explained on our page. We have 3 different stages of the coaching: psychology, technicals, and live trading. We have a whole lot of the things explained on our page. You can find out more information as well. Just watch this video here where I'm explaining how does it work. And you can, by the way, qualify for a free conversation with me of 15 minutes where we can discuss these things. So it's scrembocoaching.com with the page. You can register now. On your email, you're going to find out the offer straight away, and you can reply to that. As well, for those of you looking to join the trades that I perform for myself, if you want to be part of it, we are doing trading through API. So if you think that if you want to be part of the trades that I do for myself as well, feel free to participate. There's no upfront fees. It's just a commission out of the pure profits we make. That's pretty much all. On the left side of the page, you have my trading performance documented since September 2017, and then on the right side of the page you have how does it work. On the top left corner you got our page scrembocoaching.com/today, and this is where you can have more information. Once again, thank you for watching. Hit the like button, subscribe, and make sure that you're going to do all the things backed up by the data. This is very important in the trading process. Nothing can be done out of the blue, and it's not because what we want to perform out of nothing. It's most likely we need to do things correctly just because that's how the markets are telling us to do. That's all, folks. See you soon.